Hello everyone, I am Dr. Eric Morrison. This is 7 Under 3, and I'll be covering trading education, more specifically Forex swing trading, using the TC2000 platform. Trading foreign currencies can be a challenging and potentially profitable opportunity for investors. However, before deciding to participate in the Forex market, you should carefully consider your investment objectives, level of experience, and risk appetite. Most importantly, do not invest money you cannot afford to lose. Hey everyone, it's the 8th of March at around 5 p.m. and we are Central Time, and we are going to be covering the speed run with 21 different currency pairs for this Sunday afternoon. And we're starting here with the Aussie dollar and CAD, or Canadian dollar. And as you can see, over the weekend, from Friday around 4 p.m. till now, there has been a surge on this one particular candle. So we moved the stop up to the hump of the dragon in order to protect our profit that as far as the trade that we're currently in. The Aussie dollar Swiss franc, we're looking at one red candle below. We'll confirm this candle at 11 o'clock tonight, but as soon as this candle forms and completes its formation, then we will count this as our first indication to go short. We need another candle to form and also being red before we can have confirmation for this particular short. For the Aussie dollar, Japanese yen, again, same situation. The candle right now this afternoon has been below the RL10, and once it's formed at 11 o'clock tonight, that'll be our first indication if it still remains red at this point. And we will need another additional red candle to confirm, and after that formation at approximately 11 p.m. on Monday night, if it does form at that point, then we will go short for this currency pair. The Aussie New Zealand dollar, it's still wicky. As you can see here, we got up, we got down, we got up, we got down, we got long wicks up going north of the RL10. The RL10's over here, and everything is kind of consolidating within this currency pair. So we'll label this as wicky, and we will not trade it in order to wait for it to actually form a trend that is consistent with the season. Now with this season, it is in the fall, so it's continually go down, but as you can see here, the actual angle has kind of leveled out. So we don't see any actual direction at this point, so there is a lot of uncertainty and consolidation going here before it actually picks a direction. The Aussie US dollar, currently we're in the trade, and we're at approximately break even plus dinner for two. And then if you look at one of the averages for the dragon, we do have a short line. We can move that stop up to this particular point, so in order to protect our profit, right? But as you can see here, it is trying to think out of a direction. It's hitting up some resistance at this average and also at the RL90. But the RL10, there's a convergence of averages, and so it's trying to pick which direction it's going to be going for. The Canadian dollar Swiss franc that we're currently in, we entered in on the 21st of February. We're still in that trade, and we moved the stop down to the belly of the dragon and this location. And right now it's at the extreme end of the Bollinger Band. So what you're seeing is just making sure that you protect and continue to move down that stop in order to protect your profit. Season is winter, and it is matching up nicely, with the overall move. Canadian Japanese yen, we entered in on the 24th of February, and we're still in this trade. And as you can see, could have purchased at the close of February additional lot and gone 2 lots on this. However, with the coronavirus and the uncertainty that's going around, we just go ahead and move our stop from the RL30 down to the belly of the dragon in order to protect our move. So in this case, we're going to go ahead and make sure that we protect that. But what you're starting to see is a widening of this gap, which could indicate a potential snapback later on. The more it gets the distance between the moving averages on the 10 and the 30, it has a tendency to do is snap back. So this is not going to go down forever. It'll eventually either hit zero or some other place along the numbers, but we need to make sure that we keep in mind the distance and the gapping between each one, because this does have a tendency to snap back, and when it does, it'll go back up fast in order to get to the averages right now. And so you see a lot of convergence of the main averages, the 270, the RL90, and the 200. And so once it starts getting away from this, and it also is rubbing up against the extreme edge of the Bollinger Band, when you're at this particular point, there's not much more movement to the downside. The bulls and the bears are fighting pretty hard, and they're going to determine whether or not the trend continues to go downward. We have the Swiss franc and Japanese yen, again very wicky at this point, and as you can see, look, up, down, up, down, up, down, up, down, up, down. And so when it does this, I avoid this currency pair it is, and as you see, a leveling out too of the MACD 1030. But our bias on this particular currency pair, when it does go, is for a short. Just depends on when we have good confirmation of two red candles, solid red candles going down. Euro Aussie dollar, we're still currently in this trade. It looks like the market has had some stops in it at this point, right? So once the market kicks back up there on the Euro Aussie dollar, we'll be able to find out. Sometimes you do get hiccups with the platforms and their connections to the overall currency feeds, and so if the feed is having problems up there, then you'll get what this is called a lockout. And so you got to make sure you watch this as far as a lockout is concerned. But you got the protective stop that's in there, so it should be able to protect it up whether it goes up or down. For Euro Canadian dollar, we have a strong move up all the way up to the extreme end of the Bollinger Band, and so I moved this stop up to the hump of the dragon, right? And what we have now is a continuation of this, and we are protecting our profit as we're going with this move. And we opened this move up on the 21st of February, and we're now in summer. Euro Swiss franc, it again, wicky. Even though I have two red candles going downward, these wicks go into this particular area right there. I kind of want to get out of this area before I have any type of confirmation before I move on with a particular trend. Because as you can see here, there's this particular currency can get kind of wicky in certain areas and all that. And so what I want to do is make sure that we have strong candles with a significant red and bold candles without as many wicks up there. That's what I tend to focus on. This currency is in the spring as it is, so this should be an up move, so we should ignore this kind of downtrend unless you want to do a counter trend trade, which I don't recommend with these wicks that are happening with these candles. Again, Euro Japanese yen, same thing. We have a lot of wicks that are happening up there. We don't enter in here because we have one red candle below the RL10. We have a green candle. It goes ahead and nullifies the previous red candle, and we start all over again. Euro New Zealand dollar, we were stopped out at this point. As you can see, it went up against us. So I'm thinking the same thing with the Euro Aussie dollar, that over here, that this is probably up here, even though we don't have any currency feed for that particular pair. So we will wait. This may be the first indication of it going forward. So again, 11 o'clock or 11 p.m. Central Time on Monday may be an indication if we have two green candles for this currency pair that'll allow us to go long. Euro USD, this trade that we entered in on 25 February, and we've moved up the stop to the hump of the dragon. As you can see up there, we have a nice long trend that is skirting the RL10, and so as soon as it continues to move up and up, we move up our stop in order to protect and protect. And we have these wonderful moving averages that help us determine where we should be placing our stop to protect our profit. Again, ruthless risk management. Same thing with the New Zealand Canadian dollar. We had an entry here the 4th of March, and as you can see, it's moved up and up and up. So I went ahead and moved the stop from down here at the PSAR all the way to the belly of the dragon, then all the way up to the hump of the dragon. I figured that this is a significantly strong move and enough to protect our actual trade. So that's break even plus dinner for two. And it is in line with the season. As you can see, it's spring season. So this is all forming up nicely to follow the trend. Zealand Swiss franc. Again, we don't have confirmation of a particular short. We just have the first candle at about 11 p.m. tonight. I will make the determination as it closes out this candle and forms another candle that we have our first indication of a short. Again, I won't be able to make a confirmation of the trade until 11 o'clock on Monday before I actually go forward with another short. New Zealand Japanese yen, same thing. Candle here, our first indication. First indication confirmation will be at 11 p.m. tonight, and second confirmation, if it is a red candle going downward below the RL10, will be our second confirmation for a short for the Zealand Japanese yen. Zealand US dollar, we're currently still in the long, and as you can see here, it's break even plus dinner for two, and it opened up down, and so it's still trying to figure out. And as you can see here, which is kind of interesting, the market went down to take out all those folks that put a stop right underneath this candle. In order to stay in the trade long enough, you want to see these moving averages push, if you're in a long, push the price to the long side. So you have to be patient and wait. So what we've done here is accepted the fact with plus dinner for two, but if your risk tolerance isn't that, and you want to make sure that you protect the profit that you had within the trade, you can move it up to the hump of the dragon. It's totally up to you. But know that you could be your trade could be taken out, and this thing could go further north at that particular time. Right here, break even plus dinner for two to see if there's any potential move towards the upside. But as you can see, is a convergence of not only the RL10 but also with the RL90. So there's a convergence of averages that are going here that could squeeze this price up to pop either up or down. And we don't know where it's going to go, but it could do that. US dollar and the Canadian dollar. As you can see here, we have a trade. We have first green candle is above the RL10. This one is not, so we do not count that. We have another green candle that's above the 10, and then we have the strong move up. And so at this point, we go ahead and with the strong move up, it is on the extreme end of the Bollinger Band. So I want to keep this as a break even plus dinner for two. And it matches the summer season, and it looks like this is what they call a J-hook formation, right? Which is a very strong bullish move for this currency pair. You know, whether or not it continues to go up or down, or if this is just one extreme candle move. But this looks very promising in terms of a continued movement towards the upside. US dollar, Swiss franc. What we have here is a continuation of a short. The 21st of February continues to move down, so I moved it to the belly of the dragon. As you can see here, we're still hugging the extreme end of the Bollinger Band, along with it still being south of the RL10. We will have to make sure that to monitor this gap in case of snapback to the upside. But for right now, we've protected all of this profit, and we're still in the right season. Still winter. Last currency pair was the US dollar, Japanese yen. We're still in this trade. Again, same thing. We entered the trade on the 25th, and we're still in this trade, and it's all been south of the RL10 and continuing to skirt the extreme end of the Bollinger Band. So I moved the stop to the belly of the dragon just to protect all profit that we have in case it does shoot back up. That is the speed run. Well, if you like this video, go ahead and hit the like button below and the subscribe button. And if you want more information on TC2000, I have an affiliate link below. If you open up a TC2000 account, you will receive a $25 discount using that link. Thank you for your time.